Well, good morning and welcome to the Naples Money Managers News you can use. Good to see you all out there today. Nice and chilly.
It's been cold out.
Oh, I did take my leather jacket off. I'm Dawn Litchfield-Brown and
Marcus Bickle.
Marcus Bickle, my partner here. We're going to talk a few things, as I usually do, housekeeping kind of things, and then Marcus and I will talk a little bit about the markets because they've been kind of weird since the beginning of the year.
Yes, absolutely.
So one thing I want to say is if you haven't received our newsletter, I believe it's on the website. I'm not positive about that, but you can always call and ask us to send it to you. It's really good because it talks about the 1999 comparison that everybody keeps using and why we think this is different and how we're protecting you then and how we're protecting you now against those big falls that we had in the early 2000s, 2000, 2001, 2002. I think it was a total of 45% loss for the whole thing. So I wrote the newsletter, so I think it's great. I'll do a few shorts. The first one is, do you know how much you can pass estate tax free now?
How much is it?
$15 million per person.
Oh, wow.
$15 million. So that's new. The reason I bring it up is because a lot of people years ago, even when I first got in the business, bought life insurance to help offset the estate tax. Well, that was back when you could only exempt $600,000, which was the amount of the average farm, the cost of an average farm, and that cost. They didn't want farmers to have to sell off their land to pay estate taxes, so that became the exemption. Well, over the years, that's increased, and I'm sure that average farm is now $15 billion.
Fair enough.
You know, just looking at it like that. But thought that would be important to know. But also, before you decide to get rid of your life insurance or sell your life insurance or whatever, come and talk to us about it or talk to somebody because it's not always the right thing to do. I mean, you are going to die. We're all going to die.
Right.
It's probably a pretty sure thing that somebody's going to get paid. So we have to kind of think through that before you get rid of your life insurance because you don't like paying the premium.
Yeah.
Yeah. I mean, so one of the other things I'll talk quickly about was disinheriting a family member. You know, that's not easy, by the way. Could be a child. And that's easier than a spouse, by the way. Disinheriting a spouse is really, really hard. It's not like in a divorce when you just split everything.
Right.
Right? You can't say, well, when I die, I'm just splitting everything. Nothing's going to my spouse. There are spousal rules that you have to pay attention to. And especially with your children, if you're going to disinherit somebody, you need to be very specific in your documents that you are disinheriting them and why, so that there's no question. Like, if you just don't mention them, they're going to sue the estate and say you forgot them in your old age.
True.
So I'm doing this very quickly. There's so much here. And remember, there are 9 states that are community property states. You know what they are?
No, I don't.
Come on. I was going to do a quiz. Do you know what they are? Well, okay. Arizona, California, Idaho, Louisiana, Nebraska, New Mexico, Texas, Washington State, and Wisconsin. So in these states, you have to be very, very careful because spouses already own 50%.
Yeah.
So if you're trying to disinherit, you're just inheriting part of your 50%, not theirs. Just little things to, pay attention to. And finally, I wanted to talk about AI because I am so sick of AI. Are you sick? No, you're never sick of AI. Got the tech guy right here, and he didn't really give a good conversation about it. But what this talks about is, what do you wake up at 2 o'clock in the morning worrying about? Is it your algorithms?
Probably not.
Probably not. But what it might be is if you're going to run out of money. And why you can ask an AI a question like that, right? You can say, will I run out of money? Here's what I have. There's so many factors that are not in there in the answer to that. So,
yeah, no.
And so many people like us are leaning so much into efficiency, that they're forgetting about all the emotional parts, and they're unintentionally removing themselves from your finances by trying to be up with all of the latest technology. I mean, I have a lot more here that we can talk about, but I don't want to run out of time. But I just feel like people already feel like they're a number.
Oh, absolutely.
And let's not let that happen. Let's not let them be a number. This is a soft skill that we have here. Reaching out and getting to know people, understanding what makes them tick, what number works for them, not what number works best on paper,
Absolutely.
but what works best for them. So it's a soft skill, but it is a skill, and it's very important.
Yeah, it's one cultivated over many years.
Yeah, and I'll skip this one so we don't run out of time.
As for the market, folks, it kind of dovetails nicely into the whole AI discussion. That kind of continues to plague the market from the end of last year to this year. Don talks about it a lot in the newsletter, and it's that people are worried about a bubble. Anytime there's any kind of major, not even negative news, but maybe not resounding positive news, people sell the market. We saw that this last week. There was a big deal between OpenAI and who's apparently going to run out of money sometime in 2027. OpenAI is the creator of ChatGPT. There was a big deal put between them and like NVIDIA and several of the other Magnificent Sevens for roughly about $100 billion. But that fell through, and that kind of put the market into a bit of a tailspin. And we saw pretty significant losses in anything kind of related to AI.
But people are kind of looking for something. Right?
Oh, absolutely.
They were looking for something for why it's going to drop.
Mm-hmm. No. People are definitely selling the news prematurely. But you saw things like SanDisk. They make memory for chips.
I need that.
They were up 150% in January. Yesterday they dropped, I think it was 15 or 20%. So we're seeing big moves in the market. But generally speaking, a lot of these stocks are still up. So
how is this affecting our portfolios?
Yeah,
it's a whole different ballgame from what it was in the last quarter of 2025.
Absolutely. So we've tried to kind of limit our exposure to tech compared to what we had last year. We still have some because you kind of have to participate, and it's definitely hit us, but not as bad as the rest of the market.
But I think this is one of the things we talk about on our meetings we have every week about our portfolios, and that is the calls will pull you out of the market.
Absolutely.
And that's what happened at the end of the year. We got pulled out.
In
we all kind
December.
of panicked. It felt like, oh my God, we're going to miss the market. But you know what? It's discipline. It's not a self-imposed discipline. It's a, what's the other word? I can't think of the word, but it's a methodical discipline.
Yeah, it happens. It's just systematic.
Systematic. Thank you.
That's the word you're looking for, and it is. It's true. It pulls us out. We had all this cash, and we're still sitting on quite a bit of cash. So there's some real opportunities out there, folks.
But then we decided we wanted to buy some Estée Lauder, right?
We did buy some Estee Lauder.
Did we buy the Estée
We
Lauder?
actually bought the put.
Aha, we sold a put. So we looked at the price of Estée Lauder.
Mm-hmm.
We thought it was a little too high, and it'd be a fairly short play. So we sold somebody the right to make us buy it from them
At 105.
at a much lower price than it's currently trading at.
Yeah, I think it was trading at 120 when we wrote it. We wrote a put at 105, and then the market fell apart. Estee Lauder dropped like 20%. We were going to get put, which is fine because we like the stock.
That's the key. If you like the stock at 120, why on earth would you not like it at 105?
Now, we take a little bit of a hit, but it's very interesting. This actually might turn out to be a really, really fantastic trade. I mean, all of them are, but this one might be especially interesting because of the volatility we're seeing in the back and forth. That put might expire as we call worthless, and we'll or even right at the price.
Not worthless to us or to you, worthless to the gambler.
Which is kind of the best case scenario for us. So the market's a little weird, like Don said right now, but it's providing some opportunities. So we're watching it closely, folks.
Right. So with that, I guess, oh my gosh, we're going to be under 10 minutes, so we're all excited here.
First time in a while.
It is the first time in a while. I want to let everybody know that money matters, but most of all, and most importantly, you matter. And don't forget to
like and subscribe.
like and subscribe, and please, I'm going to do a few shorts after this. We'll be sending those out as well. Mm-hmm. They're great little pieces to send to your friends.
They really are good. A lot of really good information in there from decades of experience, folks. So
decades.
It's worth.
Thanks a lot.
Well, you got to put the time in. All right. Thanks, folks.
Have a great day.